For the daredevils, the Sprott Uranium Miners ETF could be particularly interesting for 2025. In this analysis, I will describe why exactly, especially for the more active investors with a very high risk profile who are also willing to be significantly in the red from time to time, because this ETF is super volatile. Now, regarding holdings, of course, 97% of the holdings are energy related. And the top 10 holdings in total, there are 42 holdings. And the top 10 holdings account for 75%. So that is very high, meaning a concentrated ETF to further increase the risk. You could say volatility, because of course the definition of risk that we use is the loss of money in the long term. But with this ETF, that could very well be possible. Well, the macroeconomics, you would say the investment, the thesis of the uranium ETF is of course entirely based on the fact that we will need a lot of energy in the future. And that is why I personally find this ETF interesting, but definitely not for beginner investors. The largest holding is in Cameco, one of the top uranium producers. But there is also a large position in Kazatomprom. One more thing. What I actually notice about these holdings is quite remarkable that, for example, the position is taken in Constellation Energy Corp. Very interesting energy stock. The market value is somewhat larger at 70 billion. By the way, it recently dropped nicely by 17%. This stock could also be interesting for 2025. Yes, it has other energy sources besides uranium, but Constellation Energy Corp is really interesting. What also strikes me is that, for example, Talon Energy Corp is not included. I have been following this stock for a long time. I have no regrets about investing in it. Well, I don't know these companies very well. They also don't fit well with my personal risk profile and investment strategy. I prefer to invest in companies that I can better assess, but you see an enormous return, and also one that I have been following since the IPO. Handy. I was considering investing when the market value was still around 700 million. I could have achieved a nice return, but I didn't. Once again, due to the same situation, invest only in what you understand, and Oklo. It also looked super interesting. I don't quite understand the long-term potential of this company. Moreover, Open AI founder has invested a lot of money in Oklo, and the stock has just exploded in just a few months' time, just plus 300% or 4 times. Well, those stocks are not included in the Sprott Uranium Miners ETF, and that is quite remarkable considering the results of these stocks. What we see is an expense ratio of 0.75%, which is quite expensive for a passive ETF. The question is, of course, is it really passive? But high costs are never favorable. The dividend yield is at 3.8%, and I doubt this. I think this is not accurate, not correct in terms of dividend. So let's quickly go through this. We see a risk grade that is, of course, an F, meaning a very high risk. Why? The standard deviation is super high, 30. In comparison, the median of all ETFs in this data model, which includes more than 2,000, is 12. Short interest 4%. You see the number of holdings, top 10 holdings, the weighting is 75%. Well, that is high. Again, for comparison, the median of all ETFs is 38%. However, for example, global ETFs have only 10%, or 15% in the top 10 holdings. Volatility is high, while the turnover is relatively low. This means that there is little change in the ETF, so it is indeed passive. But then I wonder why such a high expense ratio. But well, that's another story. Drawing error is particularly bad. There are many things that are not interesting about the Sprott Uranium Miners ETF, but the potential return can be interesting, especially for people who want to trade a bit more actively. Not long-term investing, but everyone has their way. The liquidity is high, positive. The question is, when do we step in? And should we step in now? First of all, the long-term thesis for uranium definitely exists. Just look at how many nuclear power plants they are building in China. But recently, in late 2024, Sweden announced a transition about uranium. But it will take years before that is actually built. By the way, those nuclear power plants are interesting too. It costs a lot of money to build them. Once built, yes, competition is not very easy. So, Well, with an ETF, we don't have to worry about it at all. Then you can simply, yes, follow multiple uranium companies in a passive way. Now the Quant rating, which is a rating based on factors, it gives the highest weighting to momentum. And that indicates a strong sell. Actually, it's almost the lowest score, because the lowest score is a 1.0. So why is the quantity rating a sell? Especially because the momentum is actually very poor, but the expenses are also high. The dividend is poor, the risk is high, only the liquidity is high. So there are a number of top ETFs that score much higher. For example, the Argentine ETF, also mentioned on our YouTube channel, and it does score a strong buy, but do not fear. Momentum gives a very heavy weighting in this data tool. So you sometimes have to take that as truth, but sometimes with a grain of salt. For example, here at the end of 2020, the ETF received a strong sell rating, then moved to a hold, and subsequently to a strong buy. And what you see on the screen is actually the factor that changes. First, the momentum is an F, but then there is a faster increase and the momentum changes to an A+. And the Quant rating goes to a strong buy. So that momentum dominates the entire rating. In the short term, it declines, then gets a strong sell. It must be taken seriously, as shown in technical analysis. First of all, just a brief note about Zach Schrenk, who doesn't give no rating for this ETF, hasn't made any effort. And what we see in the technical analysis is that at this moment, momentum has actually shifted from strongly positive. Here, a buy signal was at plus 70% at its peak, but recently you see a strong decrease. Other technical indicators and price patterns also indicate that there is a downward trend. You can also see that the MACD is struggling to cross the zero line here. So it could very well be that the sell given on important long-term indicators is correct. And that, in any case, in the short term, this volatile ETF, which is the advantage for traders who want to trade a bit more short term, is that this ETF is very volatile. It could very well drop to the level of 42 or maybe 38. And if you're lucky, it might fall to 30 and find a support level there. A price level of 30, but that would mean a significant drop of about 33%. And even from the last peak, that is down 45%. It could very well happen, because this is a very cyclical ETF, cyclical companies. It could very well drop significantly. And that means that right now, at the beginning of November, we just have to wait a little longer. 2 months, and it will be 2025. Who knows? It might be at a very low level then. And when you see that momentum is starting to increase again, for example with the MACD, where the underlying trend begins to turn positive, it can be a very interesting investment for both the short and long term. But don't forget, the long-term investment thesis for the Sprott Uranium ETF is energy. And we need a lot of energy in the long term, especially for data centers and all other developments of economic growth. But not suitable for beginner investors. Super volatile. And the question is whether it is really a great investment. It is also a bit of speculation. And if you are a true investor, then you don't engage in this. You should primarily focus on value investing in companies that you know well and that you know are undervalued. And you can sleep easy. With this ETF, you might not be able to sleep as well, possibly. But maybe if it drops further, you can enter at a low price level and achieve high returns.